Hey everyone, Josh Martinez here, and welcome to the 2026 Nasdaq market prediction. Okay, so in front of us is the monthly time frame of the Nasdaq 100 E-mini futures. Well, that means each of these candlesticks represents 1 month of market movement. One of the biggest reasons why I like to focus in on the Nasdaq is because it tends to appreciate or go up over time, and a lot of it is just because of the way it's designed. It is a U.S. index. What that means is it represents the top 100 tech-heavy stocks of the United States of America, publicly traded companies. If a company underperforms, it will automatically be replaced with a better company. And so that's a really, really good thing. Second thing is it has what's called circuit breakers, meaning that if this were to sell off too much, the United States government will step in and basically just say, okay, everybody, time out. Take a breath, no more trading or no more selling. But basically what that does is the government stepping in to prevent flash crashes or to try to fight flash crashes. And I like that. So a couple of things that we've seen over time is, number one, this has never gone to zero. And number two, this has a 100% recovery rate up to this point. So believe it or not, this right here, March of 2020, that's COVID, right? When the whole world shut down and you weren't able to go, you weren't able to travel, you weren't able to go to the grocery store, you had to stay home and so on and so forth, right? Well, basically we had a huge massive sell-off and then the market completely recovered because the government stepped in and went to all-time highs. 2022, the market sold off, we had a bearish year, then the market recovered and to all-time highs. Last year in 2025, we had introduction of tariffs, markets sold off, then completely recovered, and now we're at all-time highs. And so one of the things that you got to understand is I like the Nasdaq 100 because it appreciates over time. It has never gone to zero. You have government intervention, which will prevent this from having a flash crash. Now, there's no such thing as 100% absolute or guarantee, but to me, it's really straightforward. Focus in on buying and manage risk. Now, I like the futures aspect because you can begin to mix in margin. Whether you want to trade full E-mini contracts or micro contracts is completely up to you. But I like the monthly time frame specifically because you can avoid a lot of the market noise. When you start looking at candlesticks which represent smaller time frames such as a 1 minute time frame, 5 minute, 15, 30 minute, 1 hour, you're dealing with market noise, which means like emotionally driven market reaction. So speeches, news, earthquakes, wars, etc., will just have this weird, unfair market movement. And if you trade off smaller time frames, you kind of got to deal with that. To whereas the monthly time frame, it's just realistically just like pure, strong momentum movement, which I like a lot. All right, so how we analyze the market is it really comes down to what you believe. And so what I believe is I believe that the market U-turns at, on, and or and around the same price point. So I look for patterns. I'm a pattern-driven trader. And so what I see on the monthly time frame is this blue line represents an angle that when or if the market comes near it, it pushes up. And so I'm looking to try to take advantage of that. So not saying the market will, but if this market were to sell off to the blue level, I would look for the market to bottom out and then U-turn and push back up like so, right? And so when you apply just a basic trend line, you can copy this information, copy the uptrend line, and normally the angle that pushes the market up is usually the angle that pushes the market down as well. And so you just kind of mirror that. It's kind of weird how it happens, but it happens all over the place. And you can kind of see that when or if the market comes near the bottom blue level, the market goes to the top blue level. When or if the market goes to the top blue level, sells off the bottom blue level. And so that's very important information to me, especially when I'm trying to determine the overall direction for the year. And so right now, it's a really straightforward thing. Expect the market to sell off towards the bottom blue level and then bounce, or if the market closes above the top blue level, expect a bullish breakout. Now, where would the market go? Right? If it goes up over time, what can you use to kind of help you determine that? Well, I like to use Fibonacci's. I think Fibonacci's is very superior. I like to use what's called the one-click fibs tool. And basically the one-click fib tool, what it will do is it will automatically apply the Fibonacci sequence. So all I do is take this vertical line, bring it to the lowest point, left click one time, select apply, and then my Fibonacci sequence will be printed on the charts. Now, this tells me that we have 2 Fibonacci's that have already completed themselves. We just recently hit an extension, and now this is our latest one. Now, I use Fibonacci's for direction, the best stop placement and the best limit to maximize profits. Normally what happens, not always, but normally what happens is when a Fibonacci extension is fulfilled, the market normally forms a fractal high, okay, in an uptrend. So if you take a look at what happened the first Fibonacci sequence, right here, the market rallied, hit the extension, and then retraced, right? So if you knew to get out of the trade or get out of the long positions before the retracement, you could have avoided some drawdown. Now, it happened again just recently. We hit the Fibonacci extension, and then so far we're in that retracement now. And now we have our new Fibonacci. So currently, right now, the end goal in mind, the target, the prediction, is going after this Fibonacci extension off of the monthly time frame, which is 32541.25. Now, let me go ahead and type that out, and then let's talk about this. So this is going to be the monthly up Fibonacci extension. That's price point 32541.25. Now, how far away is that? Well, from where we are right now, if I were just to measure, that is 27,205, okay? So 27,205 ticks above. So 27,205 ticks above. Now, what is that valued at? What is that worth? Well, if I bring in my calculator, it really just depends on what you trade with. But assuming you just bought the market and you go, well, I don't care about drawdown, I don't care about losing money, I'm just going to buy and hold, okay? 27,205 ticks, times it by $5 a tick. If you were to trade just one E-mini contract, this has a value of $136,025, okay, US dollars. Now, there's contracts with the CME, they roll over or expire every 3 months, right? So you got December, March, June, right? September, December, etc. So it's not like you can just buy and hold. So when we get into March, you're going to have to close the trade and open it into the next contract, or maybe you just buy a contract that's a couple expirations out, but not that big of a deal. But ultimately, this is assuming max opportunity where we are right now. If you were to trade a micro, which is the smallest contract that you can pick and choose from, $27,205 times it by 50 cents a tick is still worth $13,602.50. Now, the name of the game from where we are now to the target is to manage risk, right? So we're just going to look to buy low, and your job and my job, if you so choose to accept it, is to find the lowest prices to buy and then have the courage to hold trades. Now, you may not desire to hold trades overnight in the futures market because of margin requirements, but you could focus in on short-term day trading or short-term swing trading, or maybe you just say, hey, screw it, let's do it, and then you actually go after it. It's worked already a handful of times, and you got the bullish pressure of it being the U.S. index. As long as the United States of America continues to grow and the tech sector continues to grow, this will represent an upside. All right, so a quick little recap. The Nasdaq 100, we're inside of an uptrend. We're making higher highs and higher lows. We're on our third Fibonacci swing from the latest trend, which started back in October 2022. And we have a 236 retracement, making the extension the 1.618. We're going after the target 32541.25, which is about 27,205 ticks above the market. The market could either A, go up right now, or B, the market could go down before going up. We don't have that answer. But as long as the market doesn't take out the one boundary, which is 16460.00, we're going to expect the market to keep going up. Now, how would I use this information to fight day to day? Well, number one, I'll just acknowledge there's a big, massive bullish upside. That's number one. Number two, I would just go to a smaller time frame, a daily time frame, an hourly time frame, a 5-minute time frame, and then I'll look for bullish trends with low prices, and I would apply my favorite entry technique and just focus on buying for the whole year and just make my life really, really straightforward. Now, if you like these ideas and other ideas, you can always go to tradingview.com and search my name at the very top. Just put in my name, Joshua Martinez, all one word, no spaces, and you can find my profile. In this profile, what I like to do is post these ideas, and you'll see other ideas along the way. So like, for example, I already posted this on January the 2nd when we had that fractal high form. And you can see at that time, there was 28,505 ticks. What I like about this is you have this little play button. There's the before, there's the after, and you kind of see what the market has done since the overall post has been, the idea has been posted. And of course, down below, I give some ideas, I give some written descriptions and so on and so forth. So, hey everyone, I really appreciate the opportunity. My name is Josh Martinez. This is the prediction on the Nasdaq. Hope you have a wonderful day. And just kind of keep in mind, there is risk involved in trading. There's no such thing as 100% absolutes or guarantees. There is substantial risk when it comes to trading, especially if you don't know what you're doing. Very, very important to be aware of that. This is not a money printing machine, but one of the things that we like to do as educators is we like to educate, share ideas, and that's what this whole video is all about, is sharing with you ideas. We are not CTAs, we are not financial advisors, and we do not trade for people. All right, everyone, have a wonderful day.